To our next keynote address. The topic is the role of digital assets in a traditional portfolio, a private banker's view. Please welcome me please help me in welcoming Juan Carlos Salinas Royan from Mora Bank. Juan.
Thank you. Thank you. Good afternoon to everyone. Thank you very much for having me. My presentation. Oh. My name is Carlos Salinas. I'm the head of digital assets of Mora Bank. We are a family-owned bank from Andorra, and basically we started investigating what was the role of a traditional bank within the digital asset space. Okay, so we started like this journey like 3 years ago because we had some changes in Andorra in which basically we were able to develop this business line because we had a specific regulation to be able to basically to explore and to come up with products around digital assets for our clients. That's why the title of my presentation is that we like to define ourselves as a digital assets private bank. Okay. Just to give a bit of context, really all of you, that are here are aware basically of all the changes that we've seen in the market on the last few months. Okay, since the launch of the ETFs. To basically New York Stock Exchange thinking about having round-the-clock trading and tokenization and everything. And this slide, I just prepared this slide like a few days ago, and it's already outdated. For instance, this news, I think it's gone under the radar for many people, but basically we have SWIFT, which is one of the main infrastructures that the financial sector uses on a daily basis to transfer money around the world, is now fully compatible with digital assets. And this is a huge news, and in my opinion, it should have been made like the front news of every newspaper, because it is so profound in terms of basically what it will mean in the future for digital assets. So today, I want to start framing this keynote around what is in the mind of a private banking banker and a private banking client. Okay, and I'm going to frame it basically on the actual, let's say, investment situation or investment space in which we live in. Okay, I consider that all investors around the world are facing like five fundamental challenges over the next few years. Okay. The first one is basically the end of the bull market for bonds. Basically, the portfolio of a private banking client is made of, in a big chunk, about debts, bonds. Okay, so bonds have been living like a multi-year bull market because we've been living in a decreasing interest rate world. Okay, driven also by falling inflation. This regime has changed. Okay, over the last 2 years, we've all experienced a massive increase in inflation and a subsequently increase in interest rates. It's true that now there are winds of recession or crisis, which we're seeing by the reaction of central banks by cutting interest rates. But basically the thinking that this is going to reverse, that it's going to continue falling and it's going to continue like being a bull market in bonds, is like a big question mark right now. Okay, so big piece of a traditional portfolio is in question right now. Okay, now the other big part of these portfolios are equities. Okay, and what we see here is that we've been living in a time in which returns on the equity market have been extremely concentrated. In here you can see the U.S. stock market versus the other components of the other assets. Okay, and if you analyze what has driven those returns are mainly basically is concentrated on a very, very few companies which are related to technology, NVIDIA, Teslas, etc. So, you know, the diversification effect of the stock exchange is kind of disappearing. Again, when you build a traditional portfolio made of equities and debt, you expect some uncorrelation or decorrelation on the portfolio, and that is also changing. Lately, basically, we're seeing that the correlation between the S&P 500 and treasuries is kind of converging, okay? So it's, you know, it's leaving us with less and less options to have a healthy, diversified portfolio. Again, on the equity side, we are also experiencing that there are less and less choice. You know, the number of IPOs is like on a downfall, and also the number of listed companies is also falling quite rapidly. Because, you know, private money, private markets are on the rise. Other options of finances are coming to the market. I'm not talking about tokenization here yet, but tokenization definitely that will be an effect, will have an effect in here, whereby companies will find different or more flexible ways of financing their growth. And the fifth is basically we're living in a constant instability on a macro basis. We're seeing every day interest rates going up, going down. There we see wars. We see loads of basically leading indicators like the PMI, for instance, in Europe this week. It was kind of a surprise. We're seeing, you know, companies like Volkswagen laying off 30,000 people last week. You know, very, very convulsed times, okay? So, these are our choices, okay? If we are an investor, a private banking investor, or even a regular investor, these are our choices, okay? These are all the ingredients that we can add to our portfolio, okay? If we want to have one, actually, okay? And this is all framed in basically in a standard way, which we use in banks and in finance, which is called a risk return framework or matrix. Okay. In here you can see that we on the lower axis we see the volatility, or which is a measure of risk, and on the next axis we see the annualized return. So for instance, we see bonds, you know, offer low volatility but low return. The Nasdaq 100 offers high return but also high volatility. So what happens when we start adding crypto to this mix? Okay. Try to imagine also for those of you that are not finance minded. Try to imagine that you're a chef. Okay, that you're working in a restaurant. Okay, and these are your ingredients. Okay, so you're used to cook with this. Okay, these are the ingredients that you use on your daily basis. Okay, and one day a provider comes through the door and says, "Listen, Carlos, I've found 2 new ingredients on the market which are amazing. They have amazing properties. They're gonna add a lot of flavor to your cakes or to your rices or whatever. And basically, when you put them on the mix, basically you get this. Okay." You know, the little dots, the little colored dots are the assets that we were seeing before. And when we add Bitcoin and Ethereum to the mix, we get this, okay? We get a new kind of asset class, a super ingredient, superfood. It's like, you know, avocado or seeds or whatever. In which, okay, now, okay, I have this new choice to add to my, let's say, to my combination of assets. Why is this important? Because, you know, it offers a complete different profile of investment opportunity to the other assets that we're used to. And how do we measure this? We measure this by measuring how correlated is this new asset to the rest. Okay, and in this case, this study, which is made by Grayscale, the number is around 0.4. So it's an asset that definitely adds diversification and uncorrelates, a traditional portfolio. And I think that's really important. Adding to that, basically, if we frame this allocation of digital assets within, in terms of Sharpe ratio, basically, what we do here is we start adding Bitcoin or Ethereum to a traditional portfolio, 60-40, right? 60 fixed income, 40 equity. And then we start adding Bitcoin to it. And we run the numbers. We keep running the numbers. And as you can see here, if you have zero shares of Bitcoin on your portfolio, you get a Sharpe ratio of 0.8. As you keep adding percentage of Bitcoin, that curve increase up to one point in which it starts decreasing. That means that up to around 5-6%, it doesn't make sense to add more Bitcoin to a traditional portfolio, because even though you can add return, but you're also adding risk. So your risk-adjusted return is not as great. But up to 5%, basically you are increasing your Sharpe ratio. Therefore, you are adding units of return without increasing your risk. And this is really, really important. That's what we say, that a little goes far. A little of Bitcoin in a traditional portfolio helps a lot in the long run. Also, keep in mind, long run, it's very important. So, how we go about that? How do we give our clients access to these opportunities, okay? As I said before, we're a digital assets private banking, okay? And this is the magical word, trust, okay? We are a traditional bank. We've been in the business for the last 90 years, as many banks also. And we've been serving clients for many, many years, for many, many generations. And we're still there. We're still serving our clients. We're still offering services and giving them business. So why not doing the same with digital assets? And that's our key, or for any traditional finance institution, this is the biggest value that they hold, trust. Because technology goes very fast. There are people that are more advanced than banks for sure. I'm not going to be fighting with Binance or Coinbase or whatever about having a better app or better experience, but I can fight with. But this is my key selling point. I can sell trust, and that's not easy to sell. So what do we offer? We saw that basically the first piece to integrate in a bank, it was custody and forensics. Forensics meaning understanding very, very, very well how that digital asset wealth was created, where it comes from, what is the life of this wealth for this client. So reinforcing the compliance processes, the AML, KYC, understanding 100% where this money comes from and how it has been formatted. That was key, as well as having the custody piece. Why custody? Well, I will come back to the why in a minute. We also offer specialist funds. We also offer flow and structured products. We have Ferran Vila, our Chief Strategy Products Officer, around if you want to get more information about that. And also we offer all the ETFs. All the ETFs are available in the market. We offer them to our clients. But we've gone one step ahead. We've also created our own products around this concept, okay? Full reserve and full segregation. This is really important, okay? There are loads of basically chatter around about the fractional system in which the banking system is built on, which has its advantages and also its disadvantages. I truly believe that on the digital asset space we need to move on. We need to move on into a full reserve, full segregation system. That means that if you bring one Bitcoin to Morabank, you will always have one Bitcoin at Morabank, and that one Bitcoin will always be on your account, and nothing is done with that one Bitcoin, for instance. So that's what we call full reserve, full segregation. And what we've done, we've created two funds. One for Bitcoin, one for Ethereum, and a third one is coming, which is an Ethereum with a staking layer. How we do this? Basically, we just hold the Bitcoins on behalf of the clients. These are physical investment funds, which means that you need to have the asset first to come to the fund, and the day that you want to go, I'll give you back your Bitcoins, I'll give you back your Ethereums, fully. Obviously, we charge commissions. We need to make a limit for this, but we don't charge them inside the vehicle or the fund. We charge them outside. So therefore, if you put 5 Bitcoins in the fund, in 5 years' time, you still have 5 Bitcoins. And this is pretty new because we do that basically wallet-to-wallet transaction. So we are not basically going through any omnibus account, anything like that. We just go from the client's wallet to the Morabank wallet to the fund's wallet and reverse. That's very important. I'm running out of time. So some benefits that we have, basically there are some fiscal benefits if you're an Andorran resident. We let our clients diversify into the digital asset from a traditional framework. You have a claim on your Bitcoins. The Bitcoin that you bring is yours and is there for you on your wallet. And also eliminates the complexity of investing, the bookkeeping, and also solves frictions that, maybe it's a bit too early, but they will come up, like for instance, inheritance, donations, transparency. These are things that maybe we're a bit too early, but these issues will come up and will need to be solved. So with this, we like to say, we at Morabank, we are your banks, and your coins are your coins. Thank you very much.